here's Tesla. There is no way that you can look at this chart and say that this is going down. Okay, traders, hope you had a great trading week. In today's video, we're going to go through 10 stocks to look at for next week. I actually have more than 10, but I'm going to walk through how we're going to whittle this down. As always, subscribe to this channel and click all notifications, because what we go over here is extremely timely. Now, I want to walk through Tesla, and then I want to walk through how we're going to identify what the next 9 are. Now, Tesla to me has been just a battle, and you're in a position with this market that you need to be able to change your opinion on a dime. If you can't change your opinion and you're going to be stuck with ego, you're going to get slaughtered in this market. I can't be any clearer. I'm just stating for a reason. If you're going to get stuck on ego, just sit out until this settles down. Okay, and I'll give you a great example of a trade we did today as well. So here's Tesla. There is no way that you can look at this chart and say that this is going down. Now, I had puts today. My puts were wrong, and I wound up just reversing the position at the end of the day. And I'll just show you something on this. So you have to you have to trade what's in front of you, as I like to say it. Now, I've got a curling 21-day moving average on Tesla. When was the last time I had the 21-day moving average curling up? When's the last time, just by looking at this chart? It was back here. So I have to look at past ideas and assume that it's going to do the same thing again. You don't know that it is, but you have to ascertain that this is a probability and this is what happened. Maybe there's another time when we can go back and look at this and see if it did something similar. Here it is pointing up on the 21-day, down on the 21-day, up on the 21-day. Okay? See how it rode the 21-day and then went up? Right? So when you start seeing patterns like that, your goal is to identify patterns and benefit from them. So I don't think that this is a long shot to assume that next week this can trade up, right? This would get you to 793. I don't think that's a ridiculous request for this stock to do this. Now take a look at this on the weekly. Now I'm explaining this as somebody that came in short and changed my opinion by the end of the day. I'm not looking for this to run all the way back up and saying it's going back to highs. I'm saying there's a trade here. What we're going to be going over are trades and how to get in front of institutional money. I'm going to show you how to get in front of institutional money in a minute here. So we have this trade, we know where we're at, and we know how it would line up. And I want to just walk through one idea so that people understand how you need to think. So there's this limiting belief out there that professional traders are right 80% of the time, 70% of the time, and it's just not accurate. And I want to give you an example. So here's Meta, and we're going to get rid of all this data, and I'm just going to walk through this. Let's do this on a much smaller time frame. Do it on a 2 minute so that you can see. So here I am, and I am short from down here. I own puts from down here. I come in today and I look at this and I can see that I'm wrong. I'm making a higher high. I'm breaking out. Now I have an orb, which is an opening range breakout right here. What do? Right? I can do one of two things. I can let ego get in the way, or I can make money, okay? Because this is a really simple trade to set up, right? So you could just put your entry right there, you'd put your stop right there, and now we're risking $1. So I'm in this trade, I'm right here, and all we do now is just enter this, close the puts out, lose $1.50 on the puts. I think it might have been closer to $2 with slippage. Let's call it $2, okay? Risk another $1 here on the long side, and then all I do is constantly just keep walking up my stop to the low of each one of these bars until it finally clicked off and got out there. Now, instead of losing $2 and holding that trade, I put myself in a position where I could make $5. So even though I came in thinking one way, I switched. So if you're going to let ego get in the way right now, in this kind of market, you're going to get absolutely slaughtered. You have to have your head on the swivel and you have to be able to act fast. Now, let's go through how we're going to get in front of institutional money, right? We want to be in front of large pools of capital. So let's focus on what we know. We know that the large institutions are completely underinvested. We know they have record cash positions. We know if there's a rally that they are not going to be able to sustain being out of the market if there's any kind of rally here whatsoever. Specifically, they're going to focus on large cap names. Why? They're going to focus on large cap names because they're going to want liquidity, meaning if and when this rolls again, they're going to want to be able to get out. We can look at this and see how we're constantly being walked down. It's not rocket science. but they're so far behind that these institutions are going to have to participate, and they're going to be looking for sectors that are inflation resistant, not bulletproof, and stocks that have high relative strength. So how are we going to find stocks with high relative strength that get us into the Nasdaq, that are large cap and have liquidity? Well, it starts by whittling the names down to the best names that we can find. How are we going to find the best names in the Nasdaq? So what we're going to do is we're going to start with the Nasdaq 100. This is the Nasdaq 100 stocks above the 200-day moving average. Now we can see that we're at a level that's so grossly oversold that we have not seen it since the financial crisis of '08, meaning that we are more oversold in the Nasdaq 100 right now than we were during the pandemic, more than 18, more than the correction of 16, more than 11 and 12. Okay, we are that oversold. So that shows you the magnitude of how we can bounce, right? Everything has an equal and opposite reaction to it. So you can see '09 and how we were here, and then you can see how we bounced. So I'm not suggesting that that's going to happen and we're going to get this overbought reading, but you can see how that may happen, right? You could see that maybe you could bounce up. And the percentage has already increased from 4%, which was the low, to 16%, meaning 16 names are above the 200-day moving average. Now, knowing this, knowing that they're underinvested, it would just very simply make sense to go through the list of names that are in the Nasdaq 100 that are liquid, that have the highest relative strength, and we can define that relative strength by names that are over the 200-day moving average. So now that I've walked you through how to get through large pools of capital and how to get in front of them, okay, that was because someone asked how to get ahead of institutional investors. That's why I just explained it. I got that from the comments, so please comment below. Your comments are why I create content. And please like the video because it supports the channel and helps with the algorithm. So let's get into it. So now that we've distilled how we got to these names, let's drill down into these names and see if we can find spots. Stay to the end too, because there's one that's in a separate list that I want to go over that people are going to need to watch. So here we are with T-Mobile. Now, why T-Mobile? Very simple. I'm above the 200-day, I'm above the 50, and I'm above the 21. How many stocks that are in that Nasdaq 100 are up around this level? 84% have less relative strength than this stock. So what we have to do is look at this stock and go, okay, is this something that we would want to be in? Well, it might not be my first choice to be in something like this, but I don't really care why it's moving. It could be moving because it has earning stability, right? You're constantly got subscribers paying you every month. Could be because there's a merger. Could be a myriad of reasons. But this downward trend line is pretty clear. Where your pivot is pretty clear. So to have this on your radar, knowing that we're better off than 86% of the stocks or 84% of the stocks out there right now, might not be the worst idea to look at that and go, wow, look at that close on the weekly. Well, we haven't closed this high on the weekly in how long? Since about August 30th. How many stocks can say that? Okay, I would tell you very, very few. So this is the first one that should be on your radar, and you should be watching these lines. Now, the other thing that we're going to do is we're going to understand that money is going into inflation-resistant assets. So one of the sectors that we've been trading in the trading room has been XBI, which is biotech. And you can see how we're doing here, how this bottomed out. Let me just show you this double bottom. So here you are, kind of undercut, not really, but you took out the higher high and closed there, and now we even have like a little dragonfly up here. People aren't crazy about that, but I kind of like it, frankly. So here we are, right? So now we know what index is doing well, right? So we know what index is doing well. The Nasdaq's starting to rally. We know what sector is doing well, which is biotech. So then we drill down. So we go index, sector, stock, right? Because why aren't we in semiconductors? Well, they weren't on the list, right? If you go through the list, you won't find one semiconductor above the 200-day moving average. It can't make a higher high. So don't overcomplicate it. Go to where the money's going. This is where the money's going. That's where we're going to go. What's one of the leading sectors there? Amgen, right? One of the leading stocks there. In the leading sector, in the index that seems to be turning around, at least for now. As we're all aware, this can change on a dime. But I think it's fair assessment to look at something like this and go, okay, well, this is the first close above the 50 and 21, and I'm in a trading range, and we can all see that trading range. We'll get rid of these lines, And look at that. Look how clear that is. Bonk, bonk, bonk. I mean, it doesn't get any cleaner. I wonder where it's going next, right? So I think we're probably heading back to that 259 level. So you're going to want to let this grind up, figure out how you're going to enter it. And I think this is pretty clean that you're going to want to own stocks above the 50-day moving average, right? You see that volume spike that came in? Always check your volume spikes and make sure that they're there and that they're worthwhile. That's a pretty decent volume spike on relative volume. That gets us to, right, 4 times average daily volume. Maybe they're good ones to own, right? Stocks that are trading above average volume, stocks that have a higher relative strength in the Nasdaq 100 than 84% of the other names. Maybe that's something to pay attention to. And of course, it's the end of the week, so we just can take a look at the weekly and go, well, that's interesting. So I came back down, tested the 50-week, and then bounced. And I'm falling right into this category again, where we seem to have a lot of what we refer to as bonk levels, right? And you can see that right here. So this is the space. This space has been on fire, right? If you get the newsletter or you're in the trading room, you know this. This is something we entered at $7, or I'm sorry, entered at $4.30, and now it's at $7.50. This sector is not going away, right? It's inflation resistant. It doesn't mean it's going to go straight up, but it's something that we've done quite well with. But there's other sectors that are turning around. Like this sector got very interesting, didn't it? So utilities absolutely collapsed. Why? Well, utilities collapsed because of something called the 10-year bond rallying. So the 10-year bond, right from here, the yield rallies, okay? And you can see when this took place. This looks like June 10th, June 13th. We lost 14, 15%. Well, when did this fall down? June 8th, June 9th, June 10th. Why did that fall? Because if rates were going to go higher so much faster, then people that were in utilities are not going to get the same yield, right? And they're going to want to be out of those names. So that becomes an issue. Now, what's happened? We came down to the 200. We found support. It's very possible that these names just go back to these levels, right? It's very possible that we just kind of came out of a trading range that we probably aren't used to coming out of. And that's not interesting how we came out of this and then popped back in to this, right? So we know that we should probably get at least back to the median. If you haven't watched that Bollinger Band video I did, it's one of the earlier videos I did, but it's definitely worth watching. I would watch it. I'll link it at the end, especially in this kind of market. You want to see where these are. So you can see how AEP might be something that would be on your radar, right? You can see how you held here. I mean, technically, this is one heck of a bullish harami. And I'll link that candlestick video that walks you through how to determine bullish haramis, bearish haramis, and reversal hook patterns. Reversal hook patterns, bullish and bearish right now, are very easy ways to pick off to make money. Here's Exelon. Same soup reheated, right? Comes down, utilities, starts forming a what? I mean, we should know that this is a bullish hook reversal. You can see it right here. Boom. So we can expect these to possibly trade up higher. We know that there's a dividend yield, and we know where support is. We don't have to spend a lot of time on this. We know where we are, right? And you can go look at the weekly, which is always a great idea at the end of the week to look at your positions. Isn't that interesting how we held the 50 week? And we're forming that same pattern. The open on the week was the low. The close on the week was the high. It doesn't get any cleaner than that. It really doesn't. So you're seeing that, and you're also seeing consistent earnings, right? That's what's driving us right now more than anything. Let's get rid of my 700 levels that I have on here. And what we're seeing is we're seeing consistent buying in certain names. One thing I would say for those that follow my videos and these clips, whether you follow the live morning videos or you follow these that I do at the end of the day or this top 10 I do on Saturdays, create a watch list of names that I go over. This was a name we went over a while ago, and now it's just finally starting to break out. Now, everyone can see this level right here, and you can see that fairly clean, right? And so from here, you should be able to trade yourself back up to that level. But this looks like if you could break up here after this cup, then maybe we form a handle, maybe we don't. Maybe this was the handle right here. But the bottom line is I've got a golden cross on a stock, and I don't know how many golden crosses you have, but the 50 is crossing the 200 right here. I don't know how many other stocks are doing that right now and trading above average volume, but if a stock's doing that right now and I have the earnings behind me, I would pay attention to it. So this is something that I would definitely be involved with. See how you get to this 97.54 level, right? Again, we know that we're going to have buyers. How do we know? We have high relative strength, right? Which is what we're looking for, high relative strength. We know that these are liquid names that institutions could put money to work in. That doesn't get any cleaner either, does it? Look at that pop out right there. Look at the last time you were up at this level. You haven't been here all year. So this is the highest we've been all year long. This is the highest close you've had on the weekly all year long. Something to think about when you start looking at it from that perspective, right? So when you come out of a correction, the names that are going to lead are not going to be the names that did lead, right? So maybe we can trade the Microsofts and Apples of the world, but they're not going to lead the next rally. It just doesn't work that way. Frankly, I think it's going to be biotech, and that's why in the trading room we're leaning that way. I just think that they're the names that simply make the most sense. AZN is on the list, and I like this. I like when you're starting to see gap ups and they can't get in fast enough. When you start seeing things like that, pay attention to it. It's not on just earnings, right? It's just I can't get in this fast enough. Now, is that because people want to be in the space? I do. I think it's because people want to be in the space. They want that recurring revenue, right? We saw that you're seeing that all over the place. They want the recurring revenue and they want to know that it's stable. Look at MetLife. Look at that move on MetLife today. So what we're doing is looking for stability. Flip this level at 67.40 and then see if you can get up here. This will be a slow mover, but I think it's worthwhile. And this is one that I'll show you. We did this in the trading room. I have the whole thing mapped out. One of the people in the trading room asked me to show me how I got to the target. Target is the upper channel. I just drew it just to give us an estimate of where we're at. We entered this yesterday. We're up about $10 in it already. I don't see anything but blue skies above. How many stocks are above, right, everything right now? How many are out there, right? So if you kind of look at it from that perspective, how many are closing like this? So I'm at a level, I'm at a 2-year high, but here, let me show you where I'm really at. So if you go and take a look at this, and you take a look at this one level, there might be 1 or 2 weeks where we've closed higher. Now, if I look at this on the monthly, this is the highest close. If I close right here on the monthly, this is the highest close I've ever had. How many stocks can say that? Not many, okay? Not many. So how many stocks are closing at an all-time high? Now, if you go through this and you drill down into this, you'll find out that it's a large portion of biotech sector funds. Look how the volume's increasing. See, and I would always tell you to just a little pro tip, make these green and red so that they reflect what's going on here, because then you can look at this and go, hey, you know what? For 2 weeks, I've had nothing but buying for 2 weeks. So maybe this is something that we should pay attention to, and maybe this is starting to get more and more volume as it's breaking out. So this is not over just because we're in cheaper. Pay attention to this level and pay attention to that close. This has a lot of potential. Now, this name is not something that I'm really crazy about, but you're starting to see money flow into these names that are non-US based for obvious reasons. And some of that has to do with global energy policy. Some of it has to do with wanting to be in stocks that are in different currencies. There's a lot of reasons for that. The bottom line is just watch stocks that are starting to break above that 200 and they keep knocking on that door. And if you knock on a door long enough, what happens? It opens. See how the 50 and the 21 are getting wider and wider? You break above this and you can start watching these levels, PDD right here, and start walking it up, right? That's all you're trying to do and seeing how high you could get. It's not unrealistic that if this gets legs behind it that you could get back up to this level. This might be something that you might want to consider long term. Now, SGEN is in the right sector. I'm showing you this one, but understand something. There is a lot of big bets on both sides of this one. Okay, so there's bets that it's going to blow up. There's bets that the company's not worth anything, right? That's when we had these short reports that came out that drove it down. And this is, now you're seeing that it is worth something. So be careful. But this is not a pattern that I could not show you. And I'm just going to explain it. So you break out on huge volume. And we want to see, is that huge volume? So we go and take a look at the relative volume to put it in perspective. And the answer is emphatically yes. It's 8 times average daily volume. Anything over 2 is huge. Breaks out, forms a flag. These are my favorite kinds of flags where you have a bar, and we know wicks are price rejection, you fill in only the price rejection for 3 days. 1, 2, 3, 4, boom. Now I've got a dragonfly on top of this. If you flip that dragonfly, this is going to go up another level. I just caution you on this because I'm going everything technical. I don't have enough time to get into the fundamentals of this company, the data points, and the end game. So just go into it with eyes wide open. For me, I'm looking at this and saying, I think there's a trade here. I think this makes a lot of sense for people to have this on their radar because you're seeing massive volume come in, and maybe the bulls are right. So maybe it's something to take a look at. Now, before I get to the one that doesn't fit the group, but I really want to go over it, take a look at BIDU and see what's going on there. So here we are. We pop over, form an evening star right here, breaks down, right? It smashes your hopes and dreams, comes back down, gets to the 50-day, rides the 21 up, flips, back over. Knock on a door long enough, it opens, right? And we have the saying, so first mouse gets what? The trap. Second mouse gets what? The cheese. So if we flip this level right here, that's all we need to do, and that's all we need to see. So you want to pay attention to that, and then very clean. Let me just show you this level. I mean, it doesn't get any cleaner than that. Okay, so I'm not really crazy about these names. Everybody knows that, but their alliance between the alliance that's going on with Russia right now puts them in a really very interesting spot to start seeing way more money flow into the Hong Kong exchange and the Chinese names. So just keep that in mind. There's a reason behind it right now. And so you may see these names start to push higher and flip these levels. So just watch that level. Finally, I want to go through this name so people understand what's going on out there. So no one's going to ring a bell, okay? It's not going to happen. No one's going to ring a bell and say it's over. You have a wedge line right here on Arc K. You don't like it, don't do the trade. But see this right here? See this wedge line? See how you closed above the 50? The last time you closed above the 50 was here. Now, I'm not saying that it's going to rock and roll and we're going to get 1 or 2 days. I don't know what we're going to get, okay? This is what I have right now. I have this nasty downward trend, right? And I have to understand that that's what I have. And then I have to look at that nasty downward trend. We're going to get rid of all these indicators so you can see this. I'm going to have to understand that I have that nasty downward trend. I'm going to have to understand that I broke it, okay? I'm going to have to understand that I have to get over this little hurdle to get there. So I am not out of the woods, and technically, even though this is forming a double bottom, until I get up and over this level of 47, I am still in this downtrend because we both know that I could just roll real simple. We all know that, right? I would pay attention to stocks that are not breaking below May 12th. And why am I saying that? Well, I'm glad you asked. So here's the Qs. Here's the 20th. Here's the 12th. So on the Qs broke on the 20th. The Qs broke again here on the 16th. When did ARC break last? The 12th. That's accumulation. There's no other way to say that, right? This does fit the model to some extent of relative strength. If you compare ARC to QQQ, throw in your indicators, you're above the 21, you're not above the 50. What is ARC above? ARC's above the 50. So I would say, especially if you're thinking like longer term, this is a really interesting spot to buy this. Again, nobody's going to ring a bell at the bottom. I've been through a lot of these kinds of corrections, and the level of apathy that we're starting to see in the market where people are just like, oh, I don't even want to buy stocks anymore. I don't want to try. That's exactly what this kind of environment does. And usually that's when it's time to start taking a little risk. Doesn't mean it's going to work, but you just start taking a little risk. So that's all I have to go over. Please subscribe to the channel if you find this helpful. Share it on social media as well. I know this is an extremely trying time for people. If you're interested in joining the community, I believe we're open for another 3 or 4 days. To get a peek of it, there is a link in the top right corner. That's what I have. Comment and let me know what else you want to see. That's why I did the Nasdaq and broke down how to determine relative strength and get in front of institutions. So that's it. That's all I have. Everybody have a great weekend and trade to win.